So I also wish all the listeners a very happy and prosperous new year and hope that they benefit from these recommendations in their wealth creation journey.
Hello and welcome to this special show, Outlook 2023. The year 2022 was full of surprises which led to extreme volatility in the equity markets world over. The Indian equity markets, though remained resilient and witnessed relative outperformance vis-a-vis other developed and emerging markets, but still a long way to go. The key highlights for 2022 were record inflation in developed nations, Ukraine-Russia war, aggressive rate hikes by various central banks across the world, dollar strength, energy crisis, so much to talk about. How will the year 2023 pan out for equity markets, and which sectors and stocks should one be focusing on? To talk on this and much more, joining me now is Mr. Pankaj Pandey, Head Research, ICICI Direct. Welcome, Pankaj.
Hi, good afternoon, Geeta.
Very good afternoon, Pankaj. Pankaj, if we talk about Indian equity markets, quite a bit of resilience shown vis-a-vis the other developed nations' equity markets and emerging markets. On relative basis, outperformance, but on absolute basis, if you talk about the returns in 1 year, the returns have been a meager 4 to 5%. So, what is your view on the markets for 2023?
So, Gitu, like you rightly pointed out, what we have seen is that the Indian markets did quite well, both relatively and in absolute terms, both in terms of your economic performance as well as the stock market performance. I mean, when you look at stock market performance, our markets are, like you highlighted, up 5%. Compared to that, a big market like US is down about 18, 19 odd percent. Our sense is that when we sort of head into next year, first half especially, volatility can continue the way we have seen the volatility this particular year because we still don't know a lot of answers to a number of questions which are still out there. So, for
Right.
example, how fast the interest rate hike will happen and what kind of damage it can do to the economic growth, and also the lag effect of these rate hikes on demand cycle and corporates. And on top of it, we have COVID, which is sort of coming up again in terms of concerns. So we
Right.
believe that in this period of volatility, one would get attractive opportunities in the domestic-oriented sectors, especially
Okay.
banks, capital goods, infrastructure, logistics. Because I think
Mhm.
global sectors are still difficult to play because we still don't have a lot of answers. And besides this, I think domestically, some of the other sectors like say retail, real estate, auto, I think all of them can provide good opportunity from the medium to long term perspective. So, in the first half, whenever the volatility sort of strikes, I think a lot of these sectors can throw up interesting opportunities.
Mm. Pankaj, the banking sector was a standout performer in 2022 with Nifty PSU banks rallying around 70%. So, which are the key themes that you'll be playing out in 2023?
So, before I sort of come to some of the themes, I think on the markets overall, our sense is that Nifty is expected to sort of hit new high of 21,500,
Hmm.
largely because we see earnings growing at about 15%. And this is largely because of two, three reasons. One is the improved asset quality, especially from the banks, and we are seeing a good revival in the credit growth. I think
Hmm.
the other factor which is going to drive the overall Nifty earnings is the pickup in the capex activity and also in the capital goods as an entire domain. And then there were
Hmm.
some sectors where the margins were impacted. So we are expecting margins and profit recovery in some of these segments like say auto, FMCG, metals, pharma, oil and gas.
Okay.
So,
Okay.
and once we are also sort of introducing FY25 numbers. So, this is that our sense is that Nifty is offering a good double-digit potential upside from current levels.
Hmm.
Now, when I sort of come to some of the themes which will sort of stand out or where we see a lot of traction, there could be a number of themes. So one
Hmm.
theme, our sense is the electrification trend across auto as a sector, which is expected to sort of gain pace. I mean,
Okay.
2 years back, penetration was less than 1%. Now it is 5% on a YTD basis. In
Hmm.
three-wheelers, it's 50%. In two-wheelers, it's 4%. This was below 1% some time back. In four-wheelers, it is less than 1%, but our sense is that you will see a good upward trajectory there in terms of electrification as a theme picking up in the auto space.
Mhm, mhm. And defense space did quite well in 2022 with the PSU banking space. The PSU as a sector really threw surprise for everybody. So, which is the space in the PSU part that you would love like the most in 2023?
So in PSUs, I think defense is looking a lot more structural in nature. Our sense is that when you sort of look at the cumulative order book of most of these defense PSUs, there's about 2.2 lakh crores. So that is
Mhm,
implying a book to bill ratio of about nearly 3.8 times. Now, when you look at the opportunity sizing over the next 4 years, that is about 5 lakh crores, largely
mhm,
driven by focus more on procurement of indigenized platforms and also some of the export opportunities which are going to arise. So I think
mhm,
defense as an overall space looks a lot more structural. Besides, yes, you have banks which are also sort of looking good. But I think
mhm,
defense is something where we haven't seen much of a price performance for quite a lot of period of time.
mhm,
2022 has been the year when we have seen a decent amount of spurt, and our sense is that this is one sector where things are structurally sort of turning up better. So defense, according to us, within PSUs is looking a lot more bright.
mhm. Let's talk about top picks for 2023. So, which are the stocks that you would recommend for 2023 that would create wealth for the investors in the long run?
So now coming to topics, our topics are largely from the domestic oriented themes and sectors. And so one obviously is the Kajaria Ceramics, where our target price is 1340. We all know
Mhm,
that this company is the largest manufacturer of ceramic or vitrified tiles in India. Given the real estate boom, what we are seeing, our sense is that the demand for tiles will go up. Now, this company had faced pressure in the margins in the last 3, 4 quarters because the gas prices has risen sharply. And our sense is that now, since the gas prices have come down by 15 odd percent, we would expect margins to sort of recover. And management has guided for about 15% kind of a volume growth in FY23. And our
mhm,
sense is that overall, this company can deliver revenue growth of about 16 odd percent. Margins should sort of revert to historical average of about 16 odd percent. So I
mhm,
think it's a good setup over the next 1 or 2 years where we feel that tile players will do well.
mhm, mhm. And which are the other stocks?
So the other opportunities on the 5G side. So we like Sterlite Technologies because of that. Here our target price is 220. Now we know that this is one company which is the leading telecom infrastructure player and offering
Mhm,
its services in the optical fiber and cable segment. The company has secured an order book of about closer to 3,200 odd crores, which is the highest order intake in the last 3.5 years. And
okay.
it also had a recent order win of nearly 941 odd crores. Now, our sense
Mhm,
is that overall revenue growth for this company is going to remain pretty healthy at about 21%. And some of the segments where they were making losses, I think, will not happen, or we would not see company making losses in that segment. So from Q4 onwards, the margin recovery should also happen. So this is one company which is expected to benefit from the higher 5G deployment, both domestically and globally. And
mhm,
now, when I sort of look at another sectors, now, auto is another sector where sense is that things are shaping up well. We are expecting overall segment, except for two-wheelers, to sort of deliver double-digit kind of a growth over the next 2 years. So Maruti
mhm.
is one company, obviously, where things should see some more actions. Now,
Okay.
here our target price is 11,200. Now, we all know that this is company is a market leader. Of late, they've lost some bit of a market share, but now I think company is moving up the technology ladder and has got an interesting set of offerings in terms of new Baleno, new Ertiga XL6, or the new Brezza.
Mhm,
And their CNG models are also sort of doing well. They're doing a capex of nearly 10,400 odd crores to sort of move up the value chain. So our sense is that now going forward, volume growth could be 16, 17 odd percent. That should translate into 24, 25% kind of a top line growth and a
okay.
hefty bottom line growth.
Mhm,
And another pick in the auto space is Mahindra CI. So here our target price is 410. Now,
Okay.
we all know that this company derives good chunk of revenues from domestically, so 51% is the revenue which is coming from India, and that is where the company is doing capex. This is one
Mm-hmm.
business where the margin profile is also better. And like I
Mm-hmm.
said, overall, auto as a sector is looking good. So our sense is that this company will also do a decent amount of top line growth of over 15 odd percent and an
Okay.
uptick in margins because of higher domestic contribution to about
Mm-hmm.
13 odd percent, 13 odd percent in terms of margins.
So in the auto space, you like Mahindra CIE Automotive for target of 410, 26% upside, and Maruti Suzuki target of 11,200, 35% upside. Let's now talk about the banking space, which has been the outperformer as far as the PSU space is concerned. So will you stick to PSU bank only for 2023, or will you choose a private bank over PSU bank?
So our sense is that largely some bit of a re-rating in PSU banks has already sort of panned out. Now the differentiator between whether it is a PSU or a private bank will happen largely basis growth. And that is
Mhm.
where we feel that a bank like IndusInd Bank should sort of do well. Now, this is the
Okay.
fifth largest bank in India. Overall vehicle finance is about 26% of their overall loan book. And overall numbers for this bank has been quite steady and the company is looking to sort of deliver steady growth in the retail book of about 18 to 20 odd percent. NPA continues to improve, led by lower slippages. So we are
Mhm.
expecting overall earning growth to be pretty healthy. ROE is at about 15 odd percent. This is still trading
Okay.
at a discount of 15 to 20% on an average compared to this historical multiples. So we
Mhm.
expect IndusInd Bank to catch up. Here our target price is 1,450.
Mhm.
Similarly, in BFSI space, we like HDFC AMC. Now,
Okay.
we all know that the mutual fund schemes of HDFC AMC have started to sort of do well. They have lost market share prior, and our sense is that going forward with the better performance of their schemes, they will be able to gain or recoup the lost market share. And mind you,
Mhm.
this is the largest and the most profitable mutual fund with a AUM of about 4.2 lakh. And in general, our sense is that if the market is expected to sort of do well, AMC like HDFC AMC should benefit from that particular trend. And which is why we
Okay.
like this stock with a target price of 2,600 with an upside potential of 20%.
So in the banking space, you like IndusInd Bank and you like HDFC AMC. So what about the IT space, which has been a clear underperformer in 2022? Do you expect some bit of attraction coming back for IT companies and IT based companies?
So while the risk reward is still good in IT as a overall pack, but like I said, we're still not too sure in terms of how global things will pan out, especially in the first half. And which is
Okay.
why, despite looking attractive, we have refrained from giving IT as one of our recommendations.
Okay.
Largely, our focus has been more on the domestic side, and which is why we are focusing on, say, something like VGuard.
Mm-hmm.
VGuard, here our target price is 310 with a 19% kind of upside. It's a
Mm-hmm.
well-known company in the stabilizer segment with a market share of 40 to 45%.
Mm-hmm.
Typically, whenever the say AC sales pick up, this company also sort of tends to do well. So,
Mm-hmm.
first half of next year is the main season for these companies to sort of do well. Now, this company
Okay.
also has done well in terms of diversifying into non-South region. So now,
Mm-hmm.
non-South region contributes about 42%. At one point of time, a decade back, this used to contribute about 23%. So this is now sort of a pan-India player. The company
Mm-hmm.
also has been aggressive in terms of acquiring. So they acquired Sunflame Enterprises. Now this is a category, kitchen appliances as a category is a fairly good growing category. And so our sense is that with the kind of acquisitions or with the kind of overall improvement in the domestic market, what we are expecting, we would expect VGuard to deliver about 17% CAGR kind of a growth rate. And profit growth could be about 18 odd percent. And similarly, from a domestic perspective, we like Nesco. Now, Nesco is again a sort of a company which does or which is in the management of IT or IT related real estate, exhibition center, and food business. They manage somewhere about 1.7 million square feet of space. Now, last quarter we have seen a significant amount of improvement in their exhibition business, because now we don't have COVID-related disruptions impacting this business. So I think our sense is that whatever strong traction what we have seen in the last quarter should continue over the next couple of quarters, and that should lead to a pretty healthy earning growth rate. And we would expect next 2 years earning growth rate to be in excess of 30%, both top line and bottom line. And then they have got a good capex lined up about 2,400 odd crores. So here our target price is 800 with a potential upside of in excess of 30%.
Let's talk about Reliance Industries. This stock did not perform. I mean, it traded in a very narrow band and saw a bit of consolidation in 2022, Reliance Industries. Do you expect this stock to show outperformance in 2023?
Absolutely. I think this is why Reliance Industries, one of our recommendations for 2023. Here our target price is 3,050. Now, Reliance Retail, within the retail as a category, has been sort of one of the fastest or the largest growing retailer in recent times. They've recorded a staggering growth of over 30% in last few years. And our sense is that besides retail, which is sort of doing well, overall growth expectation here is also pretty healthy at about 25%. Now, in addition to retail, the 5G launch for Jio is also exciting us, because our sense is that by December 2023, they are likely to reach pan India, and they've got a superior spectrum. And our sense is that with a company like Vodafone hardly doing anything on that front, so we would expect the ARPU growth or the EBITDA growth for Reliance Jio to pan out on largely because of healthy subscriber addition. And I think one of the laggards for the Reliance was the oil to chemical segment. So where we have seen that the GRMs have started to sort of improve, and so that should sort of help refining segment margins and also the earnings. And also the company has been pretty aggressive in terms of the overall capex, which they have lined up to nearly 75,000 crores. So our sense is that Reliance is due for good performance, and that should happen in 2023.
2023, we are expecting to be a good year, as you just described your strategy, your themes for 2023. So, in all, what are the three key indicators that you would be closely watching out for, the cues for equity markets?
So I think overall, one is like what we have seen recently. If Indian markets continue to sort of relatively outperform, I think that is one of the best things what we have seen. The other thing is that we can't really do away with the global volatility. So if domestic inflows are intact the way they have been intact last year, I think that is another trend that needs to be watched. And the other third factor would be if we don't see the kind of volatility in commodity prices, be it crude, be it a lot of metal commodities, I think then overall earning recovery is expected to be a lot more smoother than historically or last year, the kind of volatility what we have seen. So I think if these three things are in place, our sense is that Indian markets are well on course to sort of outperform relatively and in probably in absolute terms also in 2023.
Pankaj, thank you so much for being with us, for discussing, for appraising us of what should we look out for in 2023. We wish you all the best and a very happy and prosperous 2023.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.